All right, we got a busy morning here at BNN Bloomberg. Beyond all the earnings stories and banking turmoil, we have an update on Teck Resources, which now is not going to be holding that much anticipated vote on splitting out their coal business later today. Let's start with that story. Shares of Teck are up about 4% right now. Laura Lau joining us, the Chief Investment Officer at Brompton Group. And Laura, you were telling me in the break, you are an investor in Teck Resources, but also in Glencore,
yes,
which has been rattling the cage here.
Yes, and actually different portfolios. So the Canadian funds own Teck, and the global funds own Glencore.
Okay, and your reaction to the Teck decision to pull the vote for today?
It obviously means they could not get enough votes on the B shares. Like the A shares were locked up, it's the B shares they could not get the vote for.
Right, and it gets us back to the story that this is a dual class share structure company, not uncommon here in Canada over the years. We could talk about that later, but I think the Keevil family, obviously at the center of the Class A shares, and really wanting throughout this process to get to the finish line and do the separation. As you were thinking about as a Teck shareholder, I assume the B shares.
Yes, I own the B shares.
Yeah, I mean, you heard all the different messaging out there. Is there a particular outcome that you have been hoping for more than any other?
I think either way, I think the investors have spoken that they would like the metals and the coal assets to be split. How it's going to be done? It doesn't mean that Glencore is the only buyer. You can still have Anglo-American come in. You can still have other companies come in and find a way to spin off those coal assets. So I don't think this is done. This is just, the first, second innings.
Yeah. Okay, let's, as a Glencore investor, what is your reaction to this? Is this seen as something that is encouraging, that opens the door for Glencore to possibly, be that partner that they had wanted to be?
So Glencore, for the longest time, the question was, what are you going to do with your coal assets? And they kind of pushed it off. Now they actually have a plan. It doesn't preclude them from spinning off their coal assets either. But it means that they at least have a game plan. And they will certainly have a front row seat. There'll be negotiations. But I think either way, Glencore will also be splitting their assets, whether it be with Teck or another company or by themselves. But we're not sure yet. But I do think that Glencore will be splitting those assets as well.
And is that because, we were talking earlier about it's a new investing landscape, ESG realities, that would be because they have a sizable coal footprint themselves?
Correct.
Okay.
So there's a lot of European investors that can't buy them. They would buy some of their other global miners and not Glencore because of that coal exposure.
I will say it still seems a bit complicated for, Glencore to be able to do a deal with Teck itself. I know you weren't suggesting that's actually going to happen, but just because of that dual class structure and because of how the Keevil family has felt, and even the messaging from Teck today, maybe to your earlier point, this is a case of, okay, we got the message from investors, we got to retool here, but our preferred outcome is still not going to be some kind of team up with Glencore. Is that fair?
Well, I think either way, the big thing is the price. I think the price has to be higher for Teck.
What do you, like when you look at this stock, which has had this big run, but again, I guess the other considerations are what kind of commodity cycle we're going to see over the next 5 or 10 years. You've talked to us about that in the past as well.
Yeah, so in general, what is not really well thought about is the coal markets are actually very tight because nobody wants to build a new coal mine. And we've had, this shortage of energy. So as a result, I think coal prices actually will stay higher for longer. Not quite as crazy as last year, but probably higher for longer. And on the metal side, of course, everybody's very bullish on copper because there's not enough copper in the world for everybody to have an electric vehicle.
Laura, there are so many stories this morning, so I'm just going to jump into a couple of other quick ones before we let you go. From Teck to Teck, you've had a pretty strong run up in a lot of technology stocks this year, and earnings season was going to be seen as this, key moment. Alphabet and Microsoft seem to put up some crowd-pleasing numbers. Does it give you confidence on, the ability of growth stocks to continue charging along this year?
So we had some of the bellwethers saying, IT spending was down, CDW, Texas Instruments.
Yeah.
But we're seeing that there are pockets of strength. And cloud and AI are obviously those pockets of strengths, and that's really where Microsoft and Alphabet shine.
And then the other factor out there, you've got worries around First Republic, and they seem to be trying to take steps right now to calm a market that is feeling very uncertain. Is that unsettling to you, just given the turmoil we just went through with the likes of Silicon Valley Bank?
Well, the problem with First Republic is the truth is their business model was broken. And as a result, they actually have negative equity. And that's the problem. So with negative equity, who's going to bail them out?